Welcome back to Investing with Confidence. I am your host, Joshua David. And if you're just tuning in, I was shedding some light on retirement plans, your savings for life, 401ks, IRAs, TSPs, and the difference between them, especially Roth and traditional, what you might have access to, and the benefits you may have based off of your age. If you happen to miss 2 tickets for the investing class, call 952-814-4410. You can also register for this investing class by going to learnwithota.com. So, Al, we were talking a lot about 401ks and IRAs earlier in the last segment, but we need to finish the benefits of them. Mm-hmm. You talk a lot about making those decisions yourself, and that's self-directing, right? So let's talk about some of the different opportunities or the options people have when they have a 401k. But let's just say somebody leaves the company, they have an old 401k. What does it mean to actually self-direct a retirement account?
Yeah, I think one of the important differences between the employer-sponsored plans, the 401k type plans, and having the ability to trade in a traditional or a Roth IRA is that the employer-sponsored plans are one-directional. In other words, everything you have a choice of will only benefit you if it goes up in value. If the market goes up, then you have an opportunity to benefit. But if the market goes down, if the market's sideways, you have to accept the fact that you're going to lose money. Even in a sideways market, you're still losing because fees are being taken out. So how do you get around that? In a self-directed IRA, whether it's a traditional or a Roth, there are strategies you can use that are designed to benefit you in a down market. And you have to accept the fact that we will go through down markets. It's a part of the markets. It's the way they function. They will never go in a straight line up or a straight line down, but they will go up, they will go down, they will go sideways. So there are strategies you can use for all 3 directions, which increases your odds of being successful and maybe having a larger retirement account, because you can participate not just in one direction, but 3.
That's the key word. What are the odds? You have to increase those odds to have the potential to be able to do that.
Exactly.
Most people don't increase their odds. They have fear of anything, and they do nothing. So then by the time retirement happens, they're like, man, I wish I would have done something different.
Correct.
Don't let that be you.
Right. And the fear comes from just not knowing. It's a lack of knowledge. But that's what we do. We provide the knowledge. We provide the skills to use the knowledge. But in those self-directed retirement accounts, you have access to the same strategies, the same assets that the big institutions, the pros, are using. You can have assets that have leverage. You can have assets that will benefit you in different market directions. And you can also have these accounts set up without fees. The number one way to increase your rate of return is to eliminate fees, because and Josh mentioned this before, the compounding impact. It's negative compounding. Every dollar that's taken out in a fee is no longer there growing, producing other dollars that produce other dollars that produce other dollars. You eliminate that negative compounding with the elimination of fees in your self-directed IRA. You're already making the decisions in your 401ks, so making the decisions in an IRA really shouldn't be any more fearful or daunting. You have the knowledge is available, the education is available to be able to use these assets beneficially and know when to use them. And that's the key, is not just knowing what the assets are, but knowing how to use them, when to use them, and why you use them.
Yeah, and these techniques and strategies, they're not new. They've been around for a long time.
Yep.
They're just different. And that's what people just don't understand. These are just different techniques and strategies that, that could potentially help you. And if you want to learn more about lowering that 4-letter F word, fees, you have to do something different. Self-directing could potentially be that thing. Doing it yourself, but doing that with the knowledge and the skills, and just by having that rules-based strategy. You also need those tools. So if you want to learn more about those rules and tools, Al teaches investing classes to see what you can do. See what are the potentials or the opportunities to lower fees in retirement accounts, to get there and to do that with more confidence. So callers 1 through 10, you can call 952-814-4410 for this investing class that Al teaches right here at the Academy. We do them on Wednesdays. We also have these on Saturdays. Now, you mentioned another word there, Al. I wanted to make sure our listeners heard but understand as well. Leverage.
Oh,
You talked about
I did.
leverage in the financial markets. Now think
Hmm.
about this. We use leverage in our everyday life. We have homes. People have purchased a home, and a lot of people just don't pay cash for them. They use leverage, which would be a mortgage. So they take a small down payment to control a much larger asset.
Hmm.
You have the ability to use leverage in the financial markets. And especially with retirement accounts, a lot of people don't have enough, so they can't participate in the stock market because it's so expensive. Talk about the leverage and what that really how that can impact somebody in their investment years.
Yeah, it's a little bit like magic. It's like giving a magician a dollar, and all of a sudden he turns it into $50 or $100. That's really what you're doing. It's just like you give me a dollar, and I will let you be in an investment that's worth $50 or $100. That's leverage. That's maximizing the value of the investment dollars you have. All of the financially successful people use leverage. Warren Buffett is a good example. Warren Buffett basically says just buy stock in companies that he owns and
Pretty much, yeah.
hold on to them.
Do as I say.
Yeah, but he makes probably close to $8 billion a year using one of these leveraged assets. Doesn't it make sense? So if you can take every investment dollar you have and have the potential to multiply the value of it, multiply the impact of it in the market, wouldn't it make sense to learn how to do that? These assets are available to all of us, whether you have a regular investment account or you have a traditional IRA or a Roth IRA. You can use these leveraged assets in those accounts. Now, leverage is a huge benefit if it goes in your favor. I know a lot of people are thinking, well, what if it goes against you? If it goes against you and you don't have a risk strategy, you shouldn't be in a leveraged asset. But that's the number one thing that we teach our students is how to do that, how to identify what the risk is, and then make that the number one component in a trade that you do. And that should be any trade that you do. You should have a plan that not only gives you the knowledge and the skills to identify the right asset to use, the right strategy to use, but it should also end up with you never having to say, what do I do now? Because you've already pre-planned. That plan has you identifying what the worst case scenario can be, the best case scenario, and everything in between, and how to react to it. And, people sometimes shy away from the markets because of that word, that risk. Well, there's risk in everything you do in life, but when you cross the street, you control that risk by looking both directions, by waiting for a walk signal, for example. The same thing is true in the financial markets. That can be controlled. That's manageable, and that's the number one thing that we teach you. Everything that we teach is kind of customized to the individual. So it might mean for some people they're only willing to risk $50 on a trade or $100, and maybe some people that are willing to risk $1,000 or $5,000 or $10,000, maybe because they have $1 million to invest. But it should be customized to you, so it's something you feel comfortable with. And it should be done, like I said, within a plan that not only has the component of a timing mechanism, a core strategy. It also is the components of the right asset to use at the right time, but it also will control the emotions that you have as a human being.
Yeah, and the fact of the matter is everybody has a different objective in the financial markets, in the stock market, why you're in the markets, what your goal is, but you have to have the proper vehicle to get there. I mean, think about it this way: if you were talking about Ford earlier,
Mm-hmm.
and the popular F-150, you're going to use a F-150 if it's wintertime and you're trying to get through the snow. You have a four-wheel drive vehicle to get to your destination. It's summertime now, and it's Memorial Day weekend. People are probably going to the cabin. They want to get there as fast as they can possibly get there.
Mm-hmm.
You might want to take a Ferrari and not a bicycle. So what is the proper vehicle to get there? And you were mentioning a pre-planned strategy. A lot of people think, well, I'm in my retirement years, I don't want to be glued to my computer screen and trading my retirement account every single day. You should not be doing it that way. That's why it's important to have a pre-planned plan in your investment decisions. You're more management, more longer-term strategies, passive strategies. That way you have that strategy where you're not stuck to your computer. And that's what a lot of people actually think. And you talk about the leverage. a lot of people want to learn more about these leveraged assets on how to utilize or maximize their capital. And I want to just talk about this investing class that you teach. I mean, when you talk about, I mean, I seen it last week when you were talking about the leverage and the eyes really open because it's just people just don't know what's available to them, how you utilize these markets, but do that based on what your objective is. What is the vehicle you need and how do you get there? So callers 1 through 10, I want to invite you one last time to this investing class that we teach right here at the Academy. We're located in Bloomington. They're only 2 hours. Also, they are free. Call 952-814-4410. That's 952-814-4410. Al, we had a great show here today. A lot of talk on the YouTube stream here as well. Now, with your words of wisdom, you had some great ones last week, and I've been waiting all week for that time. Let's hear it.
All right. Well, one goal to avoid, Josh, is saying, I wish I'd taken advantage of that opportunity when I could have or when I should have. Maybe it was missing out on the run up in the market since March of 2009, which is, up over 400%. Maybe it's just missing out on the run up since March of 2020 when the S&P 500 was up over 90%. Look, the economy is reopening right now, and we got a lot of money on the sidelines. There's great earnings that we've just come off of, the great earnings season. On the other hand, we've got inflation that's increasing, interest rates set to rise. But you know what? We don't really care. The market's either going to go up big, it's going to go down big, but we don't really care because we will be we'll be educated. We'll be prepared for that. The market's going to move big in both directions.